Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 9th of June, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. We're talking about futures. There's a lot of leverage, so that risk disclosure is required. Quick look at what has driven us overnight. Mostly, mostly risk-averse markets. The ECB is in full swing with the corporate bond buying. We're seeing pretty strong flight out of the DAX, the Euro stocks. Also, the Euro traders are taking more conservative positions overnight. The Asian markets are lower as well. Crude oil leading the pack down 1.7%, 1.7%, trading $50.36 with a low just 3 cents from here. And that's pretty much it in the overnight. The main news really was that the Bank of New Zealand kept rates unchanged. Bank of Korea dropped rates by 25 basis points. The Chinese markets are closed for Dragon Boat Festival, and George Soros is back trading in the market, basically stating that he is bearish on the global economy. I'm sure many of you have heard of Soros and his play against the Bank of England. As far as initial claims, about a half hour ago, the initial claims came out at much better at 764, 264,000 versus 270,000. Continuing claims 2.095 million. This is the lowest continuing claims number since October of 2000, 16 years ago almost, October 2000. So 2.095 million continuing claims. Expected was 2.17. As far as what we're expecting, what's left on the calendar today, we have 9 o'clock U.S. wholesale inventories, 9 o'clock being Central, 10 Eastern. U.S. wholesale inventories month on month expecting 0.1 for April. Trade sales expecting 1.1% for April. And then at 9:30, 10:30 Eastern, we're looking for EIA natural gas expecting 80. And then at noon Eastern, 11 Central, we're looking for U.S. household net worth. There's no estimate there. As far as speakers, not seeing anybody left on the calendar, although Draghi has spoken, Lycanen has spoken, and Vilroy have spoken, all three part of the ECB. Let's switch gears and look at what we did yesterday. Now, I want to remind you, just like it says at the top here, I'm going to be quoting the September contract as of today. Official rollover of U.S. index futures is right now. It's actually 8:30 Central in about 26 minutes. But I go ahead and switch to the September contract already. All of my data has been back adjusted to the September contract, and I did post a tweet with let me pull that up here. I posted a tweet right here with the adjustments, the premiums. So the S&P prices for June. So everything before today, all prices before today, or all levels and prices before today, have to be adjusted down 9 points to match with September's premium. And that's what's called equalizing the futures contract. And I give you a bunch of them here: the NQ, the Russell, the YM, and the S&P or the E-mini mid-cap futures. So look for that on Twitter. If you're not following, twitter.com/futurestrader71, you'll find it there. But moving ahead, you'll notice that my prices may be different than yours. And the reason is because my prices are 9 points lower because I am trading and looking at the September contract. So it's going to be a little odd to show you this yesterday's trader bite expectations. You kind of have to ignore You have to ignore the prices shown here on this Trader Byte video because they are not adjusted because it was yesterday. But the primary hypothesis yesterday was down, which did not work out. The market continues higher. The Hypo 2 did work out, but it went the opposite way. It was again kind of odd. I was was looking. Generally, the market moves lower to find buyers, and then it rotates, and then it continues higher until it finds its sellers. We're looking for an excess at the high to tell us that sellers have come in, meaning prices moved so far that they're considered to be an extreme. And what it did yesterday is it opened high real quick, came back down, and then went back up. Let's look at what actually happened here on our charts. So there it is. We open right in the crevice here, right at the key LVN from the prior day, and it's almost an open drive. Straight up, we push right through the prior day's high by 3 ticks, and then we have this big rotation, one swing rotation down, to take that back and extend our low down, and then it created an opportunity here at the mid, but crude oil inventories came out at this point. It created an opportunity for a continuation sell. We ended up getting the continuation, getting the point of control here, and then it started to rally from there. So there was a little bit of structure. The auction was somewhat orderly yesterday. It didn't just rise, and rise. But I'll tell you what, overall, this does not seem to be done on the high side. We do not see an excess high here yet. Look at this profile. The profile is skewed this way for an excess to be found, or for us to safely say, or say with a high probability. There's nothing safe about trading, but for us to say with a high probability that we have an excess, what we would want to see is for a market to push and create an excess, meaning fall really quickly. In other words, it pushes high enough to find its sellers, and then it rolls over, and then it basically leaves a profile that is very thin at the top and with a strong taper, and then the market moves away and closes usually neutral down. Okay, so there's that's how things look like. This is again, the profile here shows that there is trading near the high, which means prices are being accepted near the high, point of control near the high yesterday. We've pulled back today, but this is not likely to be done on the upside. We still have a target up top at 2116 as a measured move on the September contract. So that's how things are shaping up. As far as what we've done overnight, just to consider Globex in this, the sell-off in Asia and Europe, we opened. The volume's going to look the volume profile is going to look a little weird today because of the September versus June change. The market traded, essentially drifted through the entire session downwards, and is resting near lows. The market is likely to open below yesterday's low. However, overall, it's still within this area that we talked about yesterday when I put on a profile on both these days here. If you recall from yesterday, we were looking at this 2150, which was 2109.50. We're opening below it, and I said yesterday, if we that would be the over/under line. The expectation this morning, just to cut to the chase, the expectation this morning, we're opening out of range, out of value, but in balance here. The expectation is responsive buying higher. push to the prior day's low, an attempt to push through the 2103 area. This is the LVN and the open of yesterday, and then I expect sellers to step in to bring it back down so that we would trade in the lower distribution versus the upper distribution. So the primary hypothesis is for it to attempt higher, find sellers, step back in, but I don't expect it to fall much. I'm expecting much of the day to be spent sideways. That is your hypo 1 or my hypo 1. Hypo 2, if we open and start to drive lower, we have a better opportunity on a day time frame. Where I'm looking for it to drop and then for it to find its buyers somewhere near the prior all-time high, and then to bounce up and then continue to push higher and come back in and retest this upper range here. That would be hypo 2. There is a hypo 3 and 4. I won't cover those here, but I want to keep this as short as possible. But overall, this is a day that could create some pretty good opportunity. I'm seeing a good potential for intermediate time frame traders to step in today. There's an incentive for intermediate time frame buyers looking for a re-entry point long to step in on the gap down, but there's also an incentive for sellers to step back in as they see the market rolling over. Those existing longs might come in and step in to sell, but our job, of course, is not to predict what that'll be. Our job is to look for, once the chop ends, which side does the market break into, and then look to trade with that side on a pullback, or to lean against it if you think it's going to go back to it's a mean reversion day or a balanced day. So that's how things are shaping up. That's all I had for you. I want to remind Stage 5's traders that we are having our AMA today. Look for an invitation to that here later this morning. Good luck, and I'll catch you tomorrow. Take care.